It's Monday, March 15th, 2021. Hopefully the wind is not too bad. We got a storm blowing in. Please bear with me. I want to talk briefly a little bit about what has transpired today in the markets, things that I see coming. Please feel free to comment down below. Let us know what you see coming. Markets across the board up, and I believe this is a result now of the stimulus checks hitting people's bank accounts. People began to receive their stimulus money over the weekend. And the question is now, are we going to see tens of billions of dollars or hundreds of billions of dollars flow into the stock market and cryptocurrencies? I think we're going to see a lot of money flow in. Again, markets across the board up. Dow Jones closed up around 170 points today. Gold up, silver up. And people's faith in these markets continues to be up. And many of these people gambling in these markets, most of these people that are participating in these markets currently, these are people who do not have any idea what they're doing, and they certainly have no idea what is coming. Again, most of the people now, these Robin Hooders, people taking stimulus checks, people taking their unemployment checks, their benefit money, and they are gambling this money into the stock market. Many of these people aren't even paying rent. Many people not even paying a mortgage, yet they're gambling in these markets. It's absolutely absurd what we are seeing, but this is the time that we're in right now, ladies and gentlemen. It is a absolutely crazy time. Size matters for the president's infrastructure package, which Goldman says could reach $4 trillion. Get ready, a flood of new debt is coming. The $1.9 trillion of stimulus, that'll be old news soon. New debt is coming, and it's going to be debt that is going to build on this new infrastructure of zero carbon electricity, zero emission buses, electric vehicle charging stations. $2 to $4 trillion of this new infrastructure is coming. You will be on the hook for it. And guess how they're going to get it? Taxes. They're going to raise your taxes. So while food prices skyrocket, while cost of gas skyrockets, the cost of living skyrockets, get ready because your taxes are about ready to skyrocket. President plans biggest federal tax hike since 1993 to fund infrastructure climate initiatives. Bloomberg reports alerting Americans to the inevitable reality that the president is about to shift gears. Yes, he's going to shift from going from spending to fundraising. Somebody's got to pay for this, right? Question is, why don't they just print everybody enough money to put $100,000 in your bank account, buy you a new car, buy you a new house? Apparently it doesn't work like that. Apparently, this money has to be paid back, and you're going to be the ones on the hook to pay it back, but it'll never be paid back. It's absolutely impossible. Yet, more debt is coming, more debt creation is coming, more currency devaluation is coming. It's absolutely impossible. This is absolutely unsustainable. 100 million stimulus checks to be delivered in the next 10 days. How much will go to Bitcoin? It's a very interesting article on The Hedge. The president said over the next 10 days, 100 million checks will be delivered. I don't see how $1,400 is going to go very far with the price of everything going up, but it doesn't even matter. People are just going to gamble it in the stock market. They're going to gamble it on cryptocurrencies. Let's see where the money's going. 10% said that they're going to invest it in the stock market and Bitcoin, equating to around $40 billion of stimulus money. It's amazing. So this stimulus money, which will be spent at Walmart and Target and Kohl's and Best Buy, making other countries much wealthier. Also, the stimulus money was going to go right back into the stock market, making the 1% much wealthier. Somebody wrote me over the weekend. They said that they were at a local Walmart, and they said that they'd witnessed six people buy 75-inch big screens while they were there at Walmart. So the money couldn't get to people's pockets fast enough as they are running to Walmart buying big screen TVs. Look, the smart money is putting that money away. The smart money is paying off the debts. The smart money is buying some gold and silver. The dumb money continues to gamble. The dumb money is buying big screen TVs. I guess, you have to pick what side of this you want to be on, but I believe this is the worst possible time to be gambling money. How the Fed's inflation is driving stock buybacks. Buybacks, as you know, led to inflated earnings per share and ultimately drove stock prices higher. And then we found out that many companies, many corporations, many airlines who did all these stock buybacks had zero money put away for a rainy day, zero cash put away for an emergency. And so what did they do? They cried to the government demanding more taxpayer bailouts. Otherwise, they were going to have to lay off employees. So give us billions of dollars of bailouts or we're going to have to lay off more people. And so, of course, the government agreed and gave them tens of billions of dollars in bailouts and probably more billions of dollars of bailouts coming to the airlines in corporate America. This depleted company balance sheets last time, and it left many firms unprepared for a top-line disruption. This led to layoffs and bailouts as companies were unprepared. Amazing how we continue just to repeat the same mistakes. But nobody learns their lesson because nobody's ever reprimanded. Nobody ever pays the consequences because they know that they'll just get a bailout from the taxpayer. This money has to be paid back. We have to pay it back. And what we're doing and what we continue to do is 100% unsustainable. We are so indebted now. There's so much debt that it can never be paid back. Yet we just keep digging ourselves deeper into debt, devaluing our currency, suffering the same consequences, and allowing corporations to continue to do the same thing over and over again. More these corporate buybacks, inflating stock prices, and just offsetting the valuation of these stocks. We don't even know what the price of most stocks really is now because of these overinflated valuations, because of corporate buybacks, 0% interest rates, all this cheap money. Everything's just been blown out and nobody really knows the true valuation of any of this. Same thing with real estate. We've got artificially low rates. A lot of these lenders got very, very creative, but with artificially low rates, we don't really know what the price of real estate really is. We now are watching a frenzy take place in housing, and it's being promoted through television, through the economic and business channels, telling everybody to go out. And again, with these super, super low rates, making it affordable for people otherwise, if rates were normal, would not even have a chance of purchasing a home. But now with rates this low, people don't have to make as much money. People don't have to put down as much money. And so we don't really know what the price of real estate, I believe, should be. Let alone what the price of stock should be. But we're going to find out because things will correct. And when they do, we're going to get the real valuation of housing, of commercial real estate, of stocks. Another article today, commercial real estate, too much debt, not enough assets. We're at a point right now where we see tenants unable to pay owners and owners unable to pay lenders. And look, this is inevitably going to be very, very bad for the stock market, and it's already showing some very, very negative signs in the economy because you're seeing a lot of vacant buildings, you're seeing a lot of small, medium businesses not able to pay the landlords not able to pay the lenders. And so people's credit, business credit, landlords' credit, going to be destroyed here. And as soon as these moratoriums expire, when the dust settles, we're going to see some very, very serious trouble. And this is going to have catastrophic effects in the economy and in the stock market. Prism Outlet Mall, 40 minutes out of Las Vegas in Primm, Nevada. The mall is less than 60% occupied. Last July, the property appraised for $28.2 million. Last month, the property brought $1.52 million at auction. In 2012, the property was valued at $125 $1.5 million. If you don't think big sales are coming to America, I think you're sadly mistaken. I think you're drinking the Kool-Aid here, ladies and gentlemen. This mall that just sold for $1.52 million, $1.5 million at auction. That's all they could get. In 2012, this property was valued at $125 million. Ladies and gentlemen, the sales are coming in commercial real estate, and they're going to be coming in the housing market also, guaranteed. The Prism Mall was part of CMBX6, a commercial real estate credit derivatives index with heavy exposure to shopping centers and shopping malls. 31 of the 39 malls in CMBX6 are currently impaired, meaning they're in trouble. A lot of these loans were bundled into commercial mortgage-backed securities. You think that's not going to have effect on the stock market? Reality is coming to the stock market, ladies and gentlemen. Simon, the largest mall landlord in the nation, owned a mall in Cobb County, Georgia, that appraised at $322 million in 2012 with a $177 million mortgage from Deutsche Bank. Simon gave the keys back to Deutsche Bank. The property appraised for $130 million last October. CMBS holders now own it. And guess what? It's continuing to depreciate. So here's a mall that appraised for $322 million in 2012. Last year appraised for $177 million. The thing probably right now is appraising around $100 million, and nobody will probably touch it with a 10-foot pole. The property went to auction asking price $130 million. No bidders. Again, this property is probably worth $100 million, probably less, and nobody's probably going to touch it. URW, owner of Westfield Mall, 27 malls. They own 27 malls in the U.S., 16 in California. They own malls in Maryland, Florida, Illinois, New York City, where it owns Westfield Trade Center. They also own a lot of little stores in a lot of the major airports here in America. It's trying to sell anything right now. It's trying to sell the airport stores. It's trying to sell any one of these malls. It's carrying currently right now, it's carrying $32 billion in debt and climbing. So the question is, who will pay off this debt? Looks like the borrowers will leave it to the lenders. And guess what? Guess who owns a lot of this debt? Pensions. Your pensions own a lot of commercial real estate debt. So a lot of these pensions may be on the hook for these collapsing malls, shopping centers. The pension crisis in America is going to be an ugly, ugly crisis. And nobody even talks about. We don't talk about the derivative market. We don't talk about the pension crisis. We don't talk about all this debt and who's going to be responsible for it when all of this continues to collapse. No, people's concern today is to get that stimulus check, get it to Walmart as fast as they can, gamble it on Bitcoin or one of the other 4,000 cryptocurrencies, throw it into the stock market, fingers crossed, hope that things continue to go up. That's what they're doing. People today relying on unemployment checks, their $300 benefits. What are they doing with it? They're gambling it. Many not even paying rent. Many not even paying their mortgage payment. And so in the meantime, they're taking this money and instead of paying down debt, instead of putting a cash reserve away, they're taking it and gambling it on cryptocurrencies and the stock market, and even going to Walmart and buying big screen TVs. You know, I feel sorry for a lot of people out there who have lost their jobs, no fault of their own. But there are people out there capitalizing on this money floating around. They're capitalizing on the stimulus checks. They're capitalizing on unemployment being extended, the $300 benefits. And while they're taking in this money, they're not paying their bills. They've decided not to pay their rent, put their landlord in a very, very bad situation. And when we don't have landlords, guess what? You don't have a place to rent. So the landlord's credit's destroyed. He's out of the business. The renters, their credit's destroyed. So what are they all going to do a year from now when the dust settles? When this can no longer be extended? When the moratoriums and the forbearances run out. Your credit's destroyed, and many people could still pay their rent, could pay their mortgage, and they're not. What they're doing is they're going out and gambling the money on Wall Street. They're gambling the money on cryptocurrencies. They're going on shopping sprees. They're taking vacations, etc. I don't feel sorry for those people. I feel bad. I feel sorry for the people who had no choice, lost their job, no fault of their own, and now they're in very, very big trouble. Blew through their savings, no fault of their own. But there are people out there right now not paying their bills on purpose, putting other people in harm's way here. And I know that there's people out there that hate landlords, but look, these small, medium landlords out there, if you don't have them, guess what? It's going to be much harder for the average American to rent a house, to rent a condo. We need small landlords. We need medium landlords out there to give people the ability and the opportunity to rent a house, to rent a condo, so they can save up money to be property owners down the road. And if you put all these people out of business, what do you think is going to happen to the average renter in America? It's just bad. It's just bad for the complete economy. It's just bad for the whole economy. And it's just getting worse, ladies and gentlemen. It's just getting worse. There's so much corruption going on. So many people now dependent on a check, believing that they're just going to live on unemployment for the rest of their life and benefits. It's going to run out. It's going to run out. At some point, we all have to pay the piper. The free lunch is going to run out, ladies and gentlemen. If you're getting some stimulus money, I hope you're paying down the debts. I hope you're buying some assets. I hope you're putting some cash away. I want to close with this. I watched a news channel last night. Somebody sent it to me, and I forgot what state it was in. Actually, it was up here in Northern California. An older elderly gentleman in his 70s had lived in a house for 30 years, bought another house, and decided to take that house, rent it out. He rented it. His renters not paying him for 11 months. He was forced to sell the house $77,000 below market value just to get out of it. So landed up selling the house, took a $77,000 haircut just to get out. And so he's out of the landlord business. And guess what? He's going to go after those people for every cent. A lot of these people who aren't paying their rent believe they're going to walk scot-free. These landlords are going to come after you. They're going to want their money. These courts are going to be packed with lawsuits. But this landlord, one house, that's all he was renting. And it was destroying his credit. He was having to come out of pocket. He needed that money himself to pay his bills because he's a small landlord, 70 some odd years old. And so these people were destroying his credit, forcing him unable to pay his bills. And so he had to take a massive haircut. Now he'll sue those renters probably at some point in the future. It's trying to get blood out of a turnip. Probably won't get much, if anything, out of them. But this cannot continue. This is going to put a lot of small business owners in the rental business out. I believe that a lot of these renters are going to get out of the business, and we're going to see a flood of rental properties, condos, and small single-family residences coming onto the market. And so I think at some point we are going to see inventory pick up because a lot of these people in forbearance are so far behind. They're never going to get caught up. They'll be forced to sell. A lot of these small, medium landlords are going to get out. So we're going to see properties come on the market, and we're going to see them come on the market at corrected prices. The housing bubble, it's a matter of time, ladies and gentlemen. It's a ticking time bomb. The housing market is going to get crushed at some point. Hey, look, it's sunny blue skies, beautiful green fairways. The flowers are blooming. It's a breezy, beautiful day here in the desert. Life is good. But let me tell you, I'm not a fool, neither are you. 98% of you watching this video are not fools. You know exactly what's coming. Look, people can be out driving around in their beautiful cars. They can be out shopping, running up the credit cards, spending their $300 a week benefits, spending their unemployment checks. They're out spending their stimulus money right now today as I speak. Hey, it all looks good on the outside, but let me tell you, when you look down below at the foundation of this economy and what's happening, it is rotting and it is going to collapse. This economy is collapsing right now. You see the homeless people, you see the vacant buildings, you see the store owners that are 6, 7, 8, 10 months behind in rent. Same thing with the restaurant owners. The stock market looks great, but they are destroying the dollar in order to give this illusion that everything looks good. You look below in the foundation of this stock market, it is built on sticks, and it is going to come down hard. It is being propped up on nothing more than all this stimulus, all of these Fed injections and artificially low rates. It will not last forever. And the longer it goes on, the worse it is going to be, and the longer it is going to last, ladies and gentlemen. If you're out there enjoying the good times, enjoying the party, believing this will last forever, God bless you. I wish you the best of luck. I hope it works out. But as the 98% of you, I am no fool, just like you. You're not a fool. I'm not a fool. This is unsustainable. The inevitable is coming. And I'm going to leave everybody with this. Do not be fooled, because if you are fooled, you will be the fool. Don't be the fool. This is going to come down extremely hard. Like I said, enjoy the good times, ladies and gentlemen, because the bad times are coming, and I hope you're ready.